Hello, everyone, and welcome to another installment of This Week in Crypto. This is a weekly community call where the Sentiment team members and community members share some of their most interesting insights that they were able to find and uncover using Sentiment data, tools, metrics, and features. Today, we've also got a special guest, Peter Sik, or Peter Sikuda, one of our community members that's recently done a very interesting backtest on one of our NVT strategies or templates that we've recently released. Without further ado, I think, Peter, let's start with you. If you want to share your screen and maybe talk about a little bit about your methodology, what you were able to find with your backtest, and why you think that's a good strategy to use.
Yes, thank you. So hello everyone. So let me share the screen. Oh, it seems that my screen I don't have access to.
Hey, Peter, I would be happy to share on mine, and you could sort of narrate and just let me know when to scroll up, down, etc.
Okay then. Yeah, thanks.
Yep. Give me just one moment. Just finding it here. There we go. All right, you guys should all be able to see. Okay.
Yeah, thanks. So this alpha factor is quite well known in quantitative finance. So basically, we are looking for some signal or metric which could have some predictive information, or in other words, that on which we can get some positive returns, trading based on this only on this information. So here I had a look into your metric NVT ratio, which is explained in more detail on your Academy platform. So we'll not go into that, but yeah, what I did is basically, yeah, I choose the time horizon from the 1st of January 2019, and this was also the day when I did the asset selection, because I did it on 50 coins. So Brian, if you go up, yeah, here. So how did I select? It's quite like easy, but I wanted to avoid any survivorship bias, meaning that I don't select assets which perform well today or until today. So yeah, that's why I did the selection the 1st of January, and yeah, I had a look also on the volume, so only selected the top 50 in the volume. So regarding the strategy, or let's say the idea is that we only look on this NVT ratio, and we on daily values of those assets, and we sort them from highest to lowest, or vice versa, and yeah, we split those values into quantiles, meaning that when we split it into 5 quantiles, we basically take 20% of the values into fifth quantile and so on. And yeah, the the idea behind the quantiles is that yeah, we want to see that the top quantiles and the bottom quantiles perform the worst or best. So that should mean, or this pattern should tell us that the signal is reliable, meaning that if we have, let's say, the middle quantile performed well, it doesn't mean the metric has that stable signal. So from the analysis, it shows that it's quite stable. It looks good from this perspective. And yeah, I forgot to tell there what is the trading logic. So yeah, we allocate the most funds daily into the top quantiles, and Normally wise, when we have a long short portfolio, we of course short the bottom quantile. That would be the market neutral strategy. But in crypto, or especially in these assets, it's not possible. So we go for long only. So then we basically compare we backtest the results with the 1 day forward returns, meaning we hold the assets only for 1 day and do the allocation on the next day. If you wrangle a little bit up on the first backtest or first chart, returns chart, that shows us more up. Yeah, this one. So this would be the backtest results if we trade all the quantiles or all the assets in the portfolio. Yeah, so yeah, it performs quite well, or at least we have some positive profit. But the more interesting part is when we pick up the top quantile, and that show us a much better result, and also confirms that the strategy could work. Of course, we want to compare that to some benchmark. So as a benchmark, I can construct it, let's say, portfolio with the same assets, but I do this reallocation or rebalancing every day on equal weights, meaning that I don't look on the NVT anymore, and it's equally split it into assets, the whole portfolio, and the comparison is just a little bit below this. This is the next backtest for the top quantile, and we got a quite nice Sharpe ratio of 1.25, and return more than 2 times annual return, or cumulative returns. So this is an improvement. And also we compared, or I compared it to Bitcoin, to holding Bitcoin only, which is just below this chart. So we could also outperform Bitcoin, but not for the whole period. The most interesting parts seems to be the last 2 months, where the strategy returns jumped, and honestly, I'm not sure about the reason. I was going to look into more detail what was the reason, or look into the position, what would happen, but I haven't got time so far. So, but that's an interesting part, because maybe there is some pattern or some other information which could predict this behavior or something. So that's basically about the strategy, and I would like to say that maybe I consider it more or less like let's say a quantitative evaluation of the metric, not a real like backtest, because trading according to just one information not very reliable. So in this way, I would like evaluate the metric if there is some potential, there is some predictive information, and then I would like to combine it with some other information. So that's the idea. But in this case, it shows some really good results. Are there any questions regarding the methodology or?
Yeah. Peter, first of all, thanks for joining us and thanks for the explanation. I was wondering, and I think we were wondering last time. Do you know if you've used which of the NVT sort of formulas have you used? Like, did you use one that goes market cap divided by transaction volume, or market cap divided by token
No,
circulation? Because we have both.
yeah, yeah. Actually, I tried both, but this one is transaction volume. So yeah, because
Mm-hmm.
it just shows better results for this specific time frame, like daily reallocation. But yeah, and the circulation was quite different. So I went with this one, the volume.
Yep, that's interesting. Because yeah, I think Brian, your NVT template is based on transaction or on token circulation, right?
That's correct. Yeah, and for those who don't know, the difference is the transaction volume is taking every single transaction, regardless of tokens, whereas token circulation actually focuses exclusively on unique tokens. So if they're used once, they wouldn't be used again in terms of the token circulation ratio.
Mm-hmm.
By the way, something that we discussed on the last call 1 week ago was this jump in the performance of the model, I think like 2 or 3 months ago, where obviously it managed to pick up an asset that appreciated in value really rapidly. Have you identified which is this particular token maybe that causes that? Like if you see the backtest, there is this big jump.
Yeah. I mentioned it that that was also very interesting point. But I haven't analyzed it in more detail. I think would be worth to do it. Maybe I can share some insight about it later.
Mm-hmm. Okay, thanks.
Yeah, I noticed that your NVT performance here didn't do as well in early summer, and that's exactly what happened with my model as well, where there was kind of a divergence here in June, July, where NVT really it turned slightly bullish on my end, but it didn't justify the amount of upward movement in the price. And it's interesting. I mean, this is using token circulation. Yours is using transaction volume. But in both cases, I think we experienced similar results where NVT started looking a little bit better, but when it went something from 5K all the way up to 13K, the token circulation was never justifying that. And my theory is that's why your weighted portfolio return didn't quite make the jump and trigger the amount of buys that the actual Bitcoin return did. Because this, to me, was a manipulated move in some respect. And then as it fell back down, yours didn't quite fall as much. And then it just rocket launched up here when it saw a portfolio return. So I'd be very curious as to finding out more insight as to why there was such a large spike in November that sort of made up for the lagging gains that happened in June, July.
Yeah, I mean, it could be really also like a random or due to randomness that the selection was just right. Because, for example, in this strategy, we don't care about the like historical data. We only look on our daily values and pick or do the select or not selection, the allocation just based on the daily values. But it could be interesting to combine, like we talked before, to combine both these approaches into a single model. Yeah, if we also look into the time or to the time dimension. So yeah, something to research further.
Yeah, and I've looked into some of the altcoins. I certainly didn't look at all 50 tokens that you looked into here, but a lot of them had such small historical data that NVT
yeah.
may not have been applied to them in a significant way. So I don't know if you tested significantly what their returns were and their correlations to NVT, but I'm certainly curious as to how many of them ended up being relevant and how many kind of just had very large skewed data because of the small sample size.
Yeah, I mean, but the limitation, of course, was the data availability. So yeah, so that's why I chose the approach to test the top 50 or something
Right.
like that. Yeah.
And what's nice about NVT is the longer we get historical data for all these coins, the more it's going to be relevant, because the larger the sample size simply means that we get more and more of a moving average and a nice set of data that we can use to really gauge when things are looking bullish and bearish. So this type of thing that you did only gets better over time, in my opinion. And maybe that's why we're starting to see that it was paying dividends just in the last 2 months. So I'm curious how it would look next year, for example.
Yeah.
Any other questions for Peter, anyone?
I also wanted to mention, like, even though, yes, this model's success did kind of hinge on that one singular event somewhere in November, but it's also like afterwards, there was a clear sort of decoupling between, like, if you go all the way down to his NVT backtest versus hodling Bitcoin, like, even after that event, Bitcoin's returns started going downwards, but NVT also actually went up considerably. So it's not just that one. So I assume, because this was the major spike in Bitcoin as well. So I can kind of see why that event would also kind of trickle down to a bunch of different altcoins as well. But there's also, like, from that point on, there's a clear sort of uptrend in the NVT's weighted portfolio strategies returns compared to Bitcoin, who's mostly been trending downwards still.
Yeah, definitely, I agree. As I said, this was the most interesting part of it these last 2 months, that it really, like, yeah, jumped, and also not only once. Yeah, I would say, yeah, I would have to dig into it, like maybe like really to see which assets caused it, or maybe, yeah, it's just really due to luck or something of that. But I will definitely, yeah, provide some feedback on that.
Yeah. Feel free to ping me when you do, and I'll look at it with you, Peter. I would be very curious myself.
It could be. I'm also not surprised that your like token circulation model didn't do as well. I think some of these are probably like not necessarily market manipulation, but there's in case of altcoins, elevated transaction volume does not often correlate with elevated token circulations. So it does make sense that this would, even if it's like wash trading or something, it's an event nonetheless that kind of registers on the charts. Okay, cool. Peter, do you have like any ideas on how to maybe add upon this model, or do you have anything else that you're working on interesting that you want to share?
Well, I have maybe I can add some additional, like, analysis on that, like how it is correlated with how the factor or the values are correlated with the returns. Like, it's called like factor autocorrelations, or or to have a closer look on the positions during the time, something like that. All right, what was the proportion in time? These two analyses or two charts I would definitely include or share, and yeah, and of course I can just do on or try different metrics as well.
For sure. Well, thanks again for sharing with us. And yeah, I'm sure both Brian and Jan, will be in touch with you if they have any ideas on how to improve your model. Really cool stuff, and hope to have you on one of the next calls as well with some additional insights.
Yes, sure, definitely. Thank you.
Okay. In that case, Brian, if you wanna, since you're already sharing the screen, if you wanna move on to your insights for today, feel free.
You bet. And Peter, once again, thanks for the great study. So his study segues right into my weekly NVT update here. We saw very interesting action over the past week, as many of you may expect, with all of the volatility and some added FOMO going on, and all sorts of questions of whether the bottom hit when we were at 6,600 around Thanksgiving, and if we're about to take off above 10K. The answer, of course, is who knows, but what NVT does is sort of check as to whether the price movements that we just saw were valid and justified. And the answer actually is yes. And that's really the first time I could say this in maybe since I started these updates with NVT. And, ironically, what happened is the price last week when it crossed 8K was not really showing much token circulation. There may have been a smaller, high capital group of traders that pushed the price up. And then what happened, which is often the case in Bitcoin on high price moves, is the smaller traders and the community started to jump on to Bitcoin when it crossed 8K and made buys themselves, or at least started having token circulation increase at a high enough rate where it was justifying where the market cap was going. And that was part of why we saw it go quickly from 8K and climb all the way up to 8,900, where it's kind of wavering back and forth, trying to figure out whether it can cross 9. So if you look at these little hash marks, I'm going to go ahead and increase my screen here. So these little hash marks represent the last 10 days. This black one represents 4 to 10 days ago and the average NVT over that time span. It was very bearish because, as you guys know, the higher this hash mark is, they correlate with these red, yellow, green bars here, which represent NVT. We were not getting much token circulation during that time, but over the last 3 days in particular, particularly 2 days ago and 3 days ago, we went way into bullish territory, and I haven't seen values this low probably since April, May, and June, when we launched from 5, 6K all the way up to 13 before falling back down. Now, it was short-lived, and yesterday we went back to what's still considered bullish territory, but a little more in the reasonable range. And so what I'm seeing right now is a lot of hesitation from traders trying to figure out whether it's time to jump on and FOMO in, or whether to sell their bags and wait for things to fall back down below 8K, maybe even below 7K. Regardless of which direction things might go, it's very clear that things have picked up. And usually when things pick up like this, things can really take off. So if there's any time to really watch closely what the daily NVT outputs are in terms of token circulation, now is the time, because we could very well be bringing this average here, this average bar of January, down to this greenish area that we saw back in April, May, and June. And remember, with these moving average lines, it takes less. We don't have to go as low as we were in April, May, and June. We just have to stay below these red, yellow, and green lines here, which we are. Even in the last day, when things went back up to 109, that was below these 3 trend lines here. So if that can be maintained, I will be fairly confident that the price will continue to rise. If it doesn't, if we do stay in this NVT range and prices start to drop, that's when you would see something known as a bullish divergence, meaning the price is starting to fall as people panic, but there's still a ton of token circulation, which is showing a positive health correlation for the network. So overall, this is potentially a turning point, but if you start to see a bunch of hash marks come up here again in the 160s or even 150s, that means that this push up to close to 9,000 was kind of a fake out, and it's a good time to take a little bit of profit and wait for some better opportunities. Any questions on this, guys?
Yeah, Brian, can you also, like, it's very interesting, these low volumes. Can you show on the charts what's been going on over the last week with Bitcoin's token circulation? It could be that it stayed stagnant, but since the drop to 7 point something K, yeah.
It actually did move up. There has been an increase, and I'll zoom in here a little just because.
Oh yeah, there it is.
Mm-hmm. So we had our this day here on the 14th was our highest token circulation since the move up in the summer. It did move back down, as you guys can see here. Yesterday was more of a mundane day, but the 13th and 14th, it's hard to see here because it's just showing the here 14th and 15th, excuse me. Those were two of the highest days we've seen. So it could be just a little bit of FOMO that was happening here as prices were, crossing 8,500 and then went all the way up to 89. So right now is the time. This is why we use moving averages here, and we use monthly NVT bars instead of just analyze off the daily, because we really try to look at the full average to get a perspective of whether this token circulation that we're seeing here is being maintained. As you can see, there's plenty of fluctuation as we go through the days here, but once, if we were to draw a moving average line and it was moving up like this, that's how we would know that the average bar here is starting to fall down into the yellow and greenish territory, which is what we need to see a justified price turning point.
Can you also, while you're in the sand data charts, can you show the token age consumed charts for Bitcoin? Interested to see if this spike in token circulation correlated with some, elevated token age consumed activity. It seems like it did a little bit, both there and the average age consumed in days.
Not much in terms of days. We have like a little bit in token age consumed up here.
If you take a look at the mean age, it gives you a different view of the token age consumed. Mm-hmm. If you, especially the mean dollar age, it's better if you click just this one. You'll see that there has been a decrease. Maybe just click on the mean dollar age so that you hide the stack mean age. Or yeah.
There we go.
So there was a decrease in the mean dollar age. This is, you see the first time it has happened since November.
Can you correlate it with the price, Brian?
Yeah.
I mean, plot the price as well.
Mm-hmm.
So we did have that sort of uptick right here on the 15th as stack mean dollar age went down.
Tsanko, do you want to briefly explain what this means and how this metric works for those that aren't aware?
Okay. We look at all the Bitcoins in the blockchain, and we can see each Bitcoin, each Satoshi, when it arrived at its current address. So we can take a look at the price at this time. And we can approximate this way the amount of dollars that the current owner invested in the acquiring this Satoshi. We can take a look at the age. So how long this investor has kept their investment. So every Satoshi, or equivalently every dollar invested in this Satoshi, has been invested there for some time. And if we take all the dollars and take all of their ages, and we take the average, we arrive at this mean dollar age. And the stack mean age, the other one there, we look at the Satoshis themselves and not the dollars that were invested, but we just take the mean age of the Satoshis or the Bitcoins. And if you zoom out a little bit, you can see how much this correlates with the bull part of the cycle.
Yeah, maybe
So
do the 10 years, Brian.
Yeah, for 10 years, it's even more clear.
You can just, take 5 and then just write 10 instead. Yeah, there you go.
Yeah.
So beginning of 2013, beginning of 2017.
Yeah. So you see at the final stages of the bull market, people start to sell their holdings. And this is why the average age goes down. At the same time, you see that the price starts to increase much faster than before. And this happened in each one of the previous bull markets. We see now that there has been just, of course, a very small uptick in the price and the same small decrease in the, for a very short period, the mean dollar age is decreasing. This doesn't tell us much so far, so we have to see how it will continue, but it's a signal that we should pay attention. Some people cashed out some Bitcoins.
If anything, I think this metric is really good as a validator to see whether, those dollars that have been stagnant are actually moving, and whether a price move up is really correlating with those, the stack mean dollar age getting lower. Because if it's not, if we just see a continuation of upward movement in the stack mean age and mean dollar age, it means that whatever price move is happening might be kind of a false fool's gold sort of situation.
Could a decrease in the mean dollar age mean that there is like new dollars coming into the network?
Yes, that's what it means. Decrease of the age means that someone sold their old tokens and then someone bought them. And they bought them at the current price. So those are some new dollars came into the equation, and those new dollars right now have age 0. So as time goes, the age will start to increase.
Somebody seems to be calling from a data center because I can hear sound of some fan or something.
Yeah, I think it's Brian's mic. Sometimes there's a static noise in the background.
Or maybe Brian is mining Bitcoin at the moment. I don't know.
Yeah, I wish.
He's the cause of the drop in maximum mean age, yeah.
You're welcome, everybody.
Yeah.
Cool, thanks for that explanation, Senko.
Yeah, sorry, Brian, go ahead with the...
How are we doing on time? You have a little bit to share too, right? I want to make sure you have...
Yeah, we've got time. We've got about 20 minutes more. So yeah, I'll just share a little bit on our historical balance tool in the end, so you can feel free to go ahead.
Okay, I'll take another 5 to 7 minutes here on this new Sandsheets template that I created here, and then I'll hand it over to you. Okay, so what I wanted to do was altcoin craze going on. Take a look at what top holders, which we track, are actually doing with their tokens. What I'm essentially doing here is measuring change difference between some of our key ERC20s over the last 30 days here. Each one of these lines, and there's a lot of different colors, so I can understand if it's a little overwhelming right now, but this is still being worked on. Each of these is a different project, and this is the 0 axis here. So anytime there's an increase in the cumulative change of total supply of the top 5 holders, I chose 5 because it seemed to work best for this model, but I can change that pretty easily. You're going to see a daily move upwards, downwards, etc. This is the percent change, not the total holdings, but the percent change of that total supply. So if Ethereum is bought, or alternatively it could be sold by the community, that's when you'll see these rises in the top 5 holders bags for their holdings of Ethereum. And as we can see here, this is the blue, which matches up with ETH. We've seen a rise of about 13% in the top holders bags over the last 30 days, which is huge. That's a very large amount. And it's telling me that some of these smaller traders have sold off their bags, and the top holders are saying, okay, that's fine, I'll take more of the supply, and they're scooping it up. And even though we haven't seen ETH decouple yet, it's an encouraging sign for the number 2 market cap token, because it's showing that the people with the most capital have more confidence in the long-term viability of this token. And then alternatively, you can look at something like, look at another one that hasn't been getting much attention, Maker. This is in the negatives as well. But overall, most of these coins are either neutral or on the positive side, meaning top holders have started to accumulate more of the ERC20s over the last 30 days. And especially around here, right at the end of the year, that's when Ethereum was really being accumulated, and the first few days of January is when crypto really started to take off. So I find that to be kind of an interesting correlation. Could be coincidental, but I think there probably is some correlation there. Now, alternatively, we can look at it based on any large moves that these coins have made. Even though I track 15, you're only seeing about 8 here, because only 8 have seen serious buys or sells, or more specifically, changes in total supply by percent. So this is taking anything that crosses a threshold of 1% in either the positive or negative direction, and you can correlate them with the colors. You'll see that, as we saw in the last chart here, the dark blue Ethereum is one of the notable ones that's seen a lot of steady increases in bags. We saw a huge spike here in Augur in mid-December, which happened about 2 weeks before, or maybe 3 weeks before this recent up move in rep right now. And then alternatively, we saw a big sell in, this was Dash, just like we saw in this graph. So I actually prefer looking at this chart because it's a little easier to sort of see when there's a big move happening. And you can check back if you're a Sandbase Pro user. You'll be able to have access to any of these tabs here to see when there's a large move of 1% or greater for any of these ERC20 tokens. And I can add on more later. I can take requests on which one should be a consistent part of this template. But I think it's going to be a really nice addition, and I'm excited to write a featured article on it and share it with the community.
Sir Brian, you might have mentioned this. Does this data discriminate between exchange and non-exchange wallets in any way?
Yes. So I for time purposes,
Same question.
But yeah, we've got an on-exchange version of that graph. I think this 100% one is an outlier that needs to be corrected with our data, because Rep has not had, we don't have full tracking on Rep on exchange data right now, and I'll work that out with our developers. But yeah, we have.
There has been a big dip in Rep in exchanges though, so yeah, this could be correct.
This isn't it. This is an error because we don't have full data on exchange stuff. I checked it out. but we do have it for off exchange, so it would be more accurate for rep here, which we don't really see anything significant. But yeah, you can also check on exchange and off exchange over the last 30 days. I could expand it to something like 60 or 90 days, but I don't really think that's too relevant, and I think it might squash the data a little too much. But yeah, we have total, we have on exchange, and we have off exchange. I think the total usually gives a pretty clear picture, but if you want to get into the nitty gritty and look into specifics, you have those available.
Brian, or off exchange,
Yeah.
is it still related only to 5 addresses which you split on and off exchange? Or
Yes.
is it 5 addresses off exchange only?
It's basically the top 5 holders for all of the tokens, regardless of which of these graphs you're looking at.
Okay, because if it's off exchange, I would extend it at least to 20 and
Okay.
maybe on exchange to 10. Dina, what do you think?
Yeah, it would be also good, Brian. Actually, you can do that yourself in the SandData dashboards. If you go, this is not a chart that's in our feed, but you can search for it in the upper left corner. So click on the dashboard list text. Yep, and no, you can just click on the where it says dashboards list in the upper left corner.
Oh, got it.
Yep, and you can type in ETH holder, ETH top holders. Okay, maybe not. No, there it is. Okay, so can you just quickly go in there so we can see how this looks in our SandData? Okay, and go.
Yeah.
Go ahead, Valentin.
Here, I think you need from the controls up. You can select how many top holders you want to look at. I think by default it's 50. And also, usually I set the balance in USD to be no, because we want to see it's the last control. We want to see the amount of tokens, not the amount of dollars that these top holders collect.
Makes sense.
Yeah, and can you zoom in for it to like last 6 months or 90 days or something so we can see the movement? Let's just wait for a sec.
There we go.
Yeah, okay. So yeah, there's the blue line is the cumulative balance of top 50 non-exchange wallets or non-exchange wallets within the top 50 ETH wallets. And then the yellow one. Yeah.
We're looking at 10 right now, by the way.
Oh, we're looking at that. Okay. But yeah, it seems to be there seems to be a few sort of mini spikes over the last 2 weeks. So I can see one just before January 1st, and then I can see one right around January 8th, which might correlate with what we've been seeing on your template as well.
Yeah.
Yeah, it seems that the top holders are accumulating right now. Yeah.
Mm-hmm. And I wonder if these mini spikes might simply be due to smaller traders selling, so the percentage of the holdings of the big holders might just be increasing by default, or whether it's actual buys from the top holders themselves to get some of the supply from the smaller holders. Because it can happen 2 different ways, right?
I think it's only if people add tokens to their bags, right, Val?
Yeah. It's basically the total balance of the top addresses. In this particular case, addresses that are not exchanges.
Okay, so if smaller investors sell off to exchanges, it won't apply to the holdings by default, because the exchanges will still be factored into the total supply percentage.
Yeah, I mean, if you have traders selling on exchanges, this is like centralized exchanges are black boxes. You can't see what is the distribution of holdings of different traders there. On-chain, you see only the code or hot wallet of these exchanges, and these wallets, they don't change when traders are trading within the exchange. They're going to change if, for example, you have somebody a lot of Bitcoin and then withdrawing it to his own cold storage, then it's going to be reflected on chain. Or if you have a big holder that transfers his funds to exchange, then there's going to be a dip on this chart.
Makes sense. Very cool. Well, I'll end my segment there just so you can finish with a little bit of your own stuff, Dino.
Cool. Thanks, Brian. Okay. Present now. You must grant permissions in order to screen share. Okay, I thought I did. Let's try that again. Oh, I can't share my screen for some reason. What the heck?
Want me to just do it on mine?
Sure. Let me just see what the reasoning is. Camera is blocked. Maybe I didn't give some permissions. Just one sec. Share the screen block temporarily. All right. Yeah, I'll allow it. And now should be good. Let's see. Yep, there we go. All right. You can see my screen, right?
Yep.
Okay. Yeah, I just wanted to give a brief look at a few different tools that we don't really feature all that often in these calls that I think are extremely powerful and that I featured in the article I wrote yesterday about rep. So for those that didn't see Augur's tokens action over the last few days, it basically went up to about 100% before it dipped. I wrote about it yesterday, sort of at the tail end of its rally. I mentioned a few sort of warning signals that rep might be going down very soon, including the 4-month high spike in social volume, and also the fact that rep appeared on our top 10 emerging trends list, which is usually sort of the end of the rally for most of the coins appearing on that list as the hype basically peaks, social hype peaks about that coin, and that's about the time that we see an imminent correction. I also mentioned within this article that one of the sort of warning signals that we usually see, which is the spike in exchange funds flow, so funds flowing to exchanges during the uptrend, has not yet happened for rep when I was writing about it, but it actually happened just after I finished the article. So let me show it to you real quick here, indicating or showing just one additional indicator that Augur's rally is probably dead in its track for now. So Augur, last 6 months.
By the way, do you see Dino's screen? Because I can't.
Oh, wait, really?
I don't see it either.
I see it.
I see it.
See it?
Yeah,
Okay, I'll try to rejoin.
Okay. Jan can see it, Brian can see it, right? I assume.
Now it appears on my screen.
Oh, okay. I assume Max Bartel can also see it because he's looking at it on YouTube and has not come back to tell us something different. Yeah. So here's the spike.
Okay, I see it now.
Yeah. Here's the spike in the exchange funds flow that I mentioned. So as you can see, while I was writing it, it pretty much it hasn't happened yet, but right around the top here it spiked. So there's been an influx of funds and as well as an influx of deposit addresses moving rep to exchanges. And by the way, I think it's already started going down. If we look on Sandbase, there should be a dip in Augur. Let's see. Yeah, so it's already down 13%. There we go. So yeah, pretty much there were some telltale signs of a looming top. Now, what I wanted to share is an additional feature of ours, two of them really combined together. So the first one is whenever you see or whenever you're looking at this sort of an uptrend, there's definitely going to be a few addresses, big whales that are trying to take advantage of the rally. And one of the ways that you can find out what these whales are doing with our data is looking at the top transactions for specific coin, right? The way you can do that in Send data is you can go here to top transfers, and select the type of coin that you're interested in. So in case of rep, this would be an ERC20 coin, and you just type in Augur, and then you select the time window. And what this will do is it will show all of the top transactions for Augur over the last 7 days. And you can literally go transaction by transaction. There's a link to their Etherscan, and you can look at exactly what each of these was doing. And you can see I've already kind of done some analysis on these. A bunch of these were compound contract being interacted with in weird ways. I'm trying to figure out exactly what that is about. So all of these really big transactions aren't really going to exchanges. Like 500K Augur, which is a few $1 million, a few tens of millions of dollars actually, is going between a few private addresses and Augur. However, these smaller ones, well, relatively smaller ones, these are still like hundreds and thousands of dollars. I've done some digging on them. Like this is perfect if you really want to go granular and find addresses that you want to look at for next rallies. And I found 3 interesting addresses that I wanted to share today and kind of show you how you can use this data for future pumps, so you can kind of maybe see what's going on and what might occur in the future as the coin starts to pump again. So the first address that I was able to find by looking at these, I think it's this transaction right here. It sent 34.5 thousand rep first to an interim address and then to Bitfinex about 5 hours ago. So one of the things that you can do is we have this tool called historical wallet balance. So you go to app.sentiment.net, you go to labs, and you click on historical balance. This is already loaded up here, but basically you can choose any sort of, let's see. So this is the initial address, right? You can just select that address, copy it here, and add it to our tool, and it will show you the historical balance of basically any ERC20 coin that it's holding over time. So this is the first address that I kind of investigated, and it had some very interesting like previous movements correlating to the price of rep. Actually, let me try and zoom in a bit. January 18th. Let's see if that, oh no, okay, let's try that again. So from January 1st, let's say, to, yeah, I'm still trying to figure out how to actually zoom in on this tool. It's a bit, so from here to January.
Can you use the pre-selected?
I tried, like the pre-selected ones, the 6 month only kind of cuts to here, so it doesn't
it's too
really
small. Okay,
yeah,
okay.
it's too slow, too small. And let me go to light mode so you can see it a bit better. And we show the price of Augur correlating to the action of this address. So this address had 332,000 Augur. It went into Augur money on July 8th of 2018, and so far it's only dumped like 3.5 times, so to speak. But every time that it dumped in the past, it was a major event in Augur's price action. So this time it was right at the very top of Augur's action here. And then the smaller top, it dipped another, let's see, dumped about 3K Augur, not all that much. Then there was another dump to exchange at the summer or sort of early summer rally of Augur, correlating exactly with the top. And then finally, this yesterday's dump of over 35,000 Augur to Bitfinex about 5 hours ago. Or actually now it's like 13 hours ago, but it was exactly at the very top. So obviously, this guy, he's no stranger to kind of dumping at the very tops of the Augur rallies. He knows what he's doing, and very often his movements seem to impact the market in not so mysterious ways. So one of the ways that you can track this address the next time rep starts pumping, and you want to make sure that if this guy's doing something, it might be having an adverse effect on the price. What you can do is you can generate a signal right here from this dashboard, as long as you have an account, a free account on Sandbase, and you can say, all right, I want to be alerted whenever the rep amount of this wallet goes down by whatever threshold. Literally, because he doesn't really do any sort of interim trades. You can say anytime it drops below 1.111, 0.001 rep, let me know. So anytime that this wallet starts moving his funds again, tell me so that I can know if I'm in rep to get the hell out of rep. And so I've actually generated a signal for it. You can find it here to subscribe for exactly this type of an alert. So this is address number 1. The next one that I found by looking at these specifically is address number 2. This one is a bit less interesting, but still kind of fascinating to look at for future reference. So this guy has sent all of his 12K of Augur, which is still, I think, around $300,000 at the time, to Binance about a week before the rally. So while Augur was pretty much consolidating and not a whole lot was going on, he seems to have started positioning to exit. And then finally, this guy, let me show you. Either very lucky or somebody in the know. So he went into Augur, he had about 2.5K Augur beforehand, but he added an additional 15,000 rep about a week before the rally, selling right at the very top. So dumping all of his 17.5K Augur, which at the time I think I wrote it was about 300,000 onto Bitfinex. And actually, I wrote in the comment here, if you look at this address on Etherscan, he actually even dumped more than is shown in our historical wallet tool. So this is the 17.5K that he sent first to an interim address, and then, let me show you, to Bitfinex. So it goes to this address, and then it goes to Bitfinex. But he also sent an additional 34,000 rep, but it only held in his wallet for a minute, so it doesn't show up on our tool, and it doesn't show up in Etherscan's analytics either. So this, he actually sent around 50,000 Augur to Bitfinex right around the very top. So these are the types of addresses that you can find by really digging into deep into our tools, and then you can set up alerts for it on Sandbase so that you can be alerted the next time these guys do anything with their money. And this is not, they're not only invested in Augur, there are other coins that they kind of have in their wallets and that might skew those coins rallies in the future. So I just wanted to showcase, because we don't really talk a lot about this tool, which I think is very cool, especially when you combine it with one of our most granular tools in our data set, which is literally going one by one individual transactions and looking at what the whales are doing. So yeah.
By the way, two things around this, when you mentioned this Augur pump. So one thing is in the top holders metric, you can see that the top 100 addresses are just started to reduce their holdings. You can see a dip into that. And the other interesting phenomena is something that I mentioned before for extreme price increases for tokens. You can see how the MVRV of this token started
is there
to
a
decrease.
double? Yeah, let's see.
Yeah,
I love that.
It started to decrease while the price was still increasing, which is an early indication that people are unloading their bags and taking profits. And it's basically a huge sign. Every time there is a very aggressive pump, and you can see this pattern, it means that the price is going to go down.
Okay, let's see.
And,
am I looking at the right chart file for Augur?
Yeah, the MVRV, and then put the price on it, and you can see how the MVRV peaked and then it started to decrease while the price was still increasing.
Let me zoom in on that a bit. Yep. So it peaked here and then it decreased, even though the price was still going on the up and up. And this is something that we mentioned in the previous calls as well, this sort of double MVRV action before the actual drop. Okay, and you mentioned
It's-
also the top holders, I think.
Yeah, so for top holders, you need to select the top 100, and then you can see that they started to decrease. And we're gonna see at the end of today if this decrease is a continuing pattern. But given the MVRV pattern that we see, I'm pretty sure that the only way this price is going is down.
Okay, let's see. Taking a bit to load. Yep. Okay, so non-exchanges, right?
Yeah, the non-exchanges.
Yeah. Okay, so last 90 days, just to make it a bit clearer. Oh, no. But yeah, we can see here that it, okay, so it's a dump of, yep, a drop of about 0.2% in total rep supply. So let's see what exactly that is in terms of actual money or actual amount of coins. So this is from 8 million rep to 7. So about 100,000 rep, which isn't like, it looks like a small dip here, but it's actually quite impactful.
And this is actually, so the last data point is from yesterday. So today at midnight, we're gonna see the next one, because this metric particularly, it's updating at the end of GMT. But given the MVRV pattern, I'm pretty sure that this thing it's over. Like
yeah, and
this
look
kind of
at
pattern.
the exchanges. There's actually the exact opposite sort of trend on exchanges. Basically, correlating with everything that we've been saying is that there's a rising sell pressure. People are sending money to exchanges right around the top, selling their coins, and dumping it on the market.
Yeah, unless I don't know, there is some news coming out that is going to fuel this, like the FOMO and the price pump. Yeah, it's pretty much over.
There is, some people think that this rep rally is kind of because of the upcoming of V2 version 2 of Augur, but for now, this has been known for a few months, and there have been no new announcements about the coin and the network migrating to a new platform. Even on their site, it still says coming soon. So this might be just like buy the rumor, sell the news sort of thing. But to me, it doesn't really seem like this is fueled by any sort of fundamentals. I think it's just, I think I mentioned it as like a pump lottery. So there's been a bunch of altcoins breaking out recently that doesn't really have any sort of fundamental backings in their rallies. It's mostly just, oh, okay, I guess we're going to pump this coin today. But on our metrics, you can definitely see the moments where the tides turn and both whales and other people in the know kind of start to dump on the market, and that's when you need to get out. Okay, well, that's it for today's call, guys. Thank you everyone that participated. Thank you, Peter Sik, once again for joining us, or Peter, let me say. And yeah, I'll talk to all of you next week. If anybody else listening to this has anything that he wants to share with the Sentiment team and kind of get feedback, let us know, and we'll give you a spot on the next episode.